If you don't hold it, you don't own it. If you have wealth in those fiat money products, you own risk.
You're watching Silver News Daily. Like and subscribe for daily analysis and news on
Gold
the price
price
of
bears
gold
are
and
in
silver.
control at the
Now,
lowest
let's get
level
right
in a
to it.
month, despite the mid-Thursday's corrective bounce, as markets await more clues of the U.S. inflation data on early Friday. That said, the XAU/USD initially bounced off a one-month low after the United States inflation data flashed mixed signals and the Federal Reserve officials cheered the victory against inflation. However, a jump in the U.S. Treasury bond yield and looming China concerns favored the U.S. dollar's recovery and drowned the gold price afterward. Gold price bears are in control at the lowest level in a month, despite the mid-Thursday's corrective bounce, as markets await more clues of the U.S. inflation data on early Friday. That said, the XAU/USD initially bounced off a one-month low after the United States inflation data flashed mixed signals and the Federal Reserve officials cheered the victory against inflation. However, a jump in the U.S. Treasury bond yield and looming China concerns favored the U.S. dollar's recovery and drowned the gold price afterward. Gold price stays bearish despite U.S. CPI-induced bounce. Gold price drops to the lowest level since early July, following an initial attempt to push back the bearish bias after the United States inflation data printed mixed signals and the Federal Reserve, Fed, officials were in a rush to cheer the victory against price pressure. However, robust U.S. Treasury bond yields and fears emanating from China exert downside pressure on the XAU/USD price. U.S. Consumer Price Index for July matched market forecast to reprint 0.2% MOM figures. However, the yearly CPI improved slower than expected 3.3% to 3.2% YoY for the said month, versus 3% previous readings, marking the first acceleration in the annual rate in 13 months. Furthermore, the CPI ex food and energy, also known as the core CPI, also flashed an unchanged 0.2% MOM figures while meeting market consensus, but eased to 4.7% YoY compared to 4.8% marked in June and the expected numbers. Elsewhere, the U.S. initial jobless claims rose to 248K for the week ended on August 04 versus 230K expected and 227K prior, while continuing jobless claims softened to 1.684 M from 1.692 M versus 1.71 M market forecasts. The U.S. statistics helped Philadelphia Federal Reserve Bank President Patrick Harker to toast the Fed's progress in its fight against inflation and was joined by Boston Federal Reserve President Susan Collins and Atlanta Federal Reserve Bank President Raphael Bostic to cheer the softer U.S. CPI. However, San Francisco Fed President Daly turned down the cheers for their victory while saying, "There's still more work to do." Although the United States data and the Fed talks fueled the market's bets on the Federal Reserve's inaction for September, the traders were still concerned about the higher-for-longer rates in the U.S., as well as the geopolitical fears, which in turn favored the yields and the U.S. dollar while weighing on the gold price afterward. It's worth noting that growing fears that the UK and European Union will also follow the U.S. in limiting investment in China technology companies seem to have challenged the market's geopolitical concerns. Further, the chatters about slower economic growth in top-tier economies and recession woes in China, Germany, and the UK pushed back the gold buyers as well. That said, the U.S. dollar index marked a positive daily closing around 102.62, after initially declining to the one-week low, whereas the U.S. 10-year Treasury bond yields jumped the most in a week to 4.1% at the latest. Even so, Wall Street managed to end the day positively, despite trimming gains by the day's end. More clues of U.S. inflation eye for clear XAU/USD guide. While the aforementioned catalysts will likely keep exerting downside pressure on the gold price, traders will be more concerned with additional clues for the U.S. inflation to confirm the Fed's victory against inflation and activate the XAU/USD rebound. As a result, the U.S. Producer Price Index for July will precede the first readings of the University of Michigan's Consumer Sentiment Index for August to direct intraday gold price moves. Also important will be the yuan 5-year consumer inflation expectations for the said month. Above all, the central bank updates and China news will be crucial to determine the pair's further direction. Gold price technical analysis. Gold price justifies the downside break of the previous support line stretched from late November 2023 at a 5-week low. Adding credence to the downside bias are the bearish signals from the moving average convergence and divergence indicator. However, the relative strength index line, placed at 14, remains below the 50.0 level and suggests bottom picking of the XAU/USD. With this, the convergence of the 200 DMA and 50% Fibonacci retracement of November 2022 to May 2023 upside, near the $1,900 round figure by the press time, becomes a tough nut to crack for the gold sellers. In a case where the XAU/USD remains bearish past $1,900, June's low of $1,893 will act as the final defense of the buyers before directing the bullion toward the 61.8% Fibonacci retracement, also known as the golden Fibonacci ratio, of around $1,857. On the contrary, the support turned resistance line stretched from late 2022, close to $1,940, closely followed by the 50 DMA level of around $1,943, guards the gold price recovery. Following that, a 3-month-old falling resistance line surrounding $1,955 and multiple tops marked since late May, near $1,985, will test the XAU/USD upside. Overall, gold price is likely to remain bearish despite the latest corrective bounce. On Friday, the XAG/USD saw mild losses and will post its 4th consecutive weekly loss, having lost more than 7% since mid-July. At the end of the week, the U.S. reported hot producer price index data and positive University of Michigan sentiment and inflation expectations, which fueled a rise in U.S. bond yields. After the release of key inflation data throughout the week, American rates are rising. The 10-year bond yield reached 4.16%, up by 1.34%. The 2-year yield stands at 4.89% with a 1% increase, while the 5-year yield is at 4.3% with 1.75% gains. It's worth noting that American yields tend to be negatively correlated with non-yielding precious metals, so they may limit the XAG/USD's upside for the rest of the session. Overall, inflation saw this week the headline and core consumer price index coming lower than expected in July, while the PPI rose to 2.4% higher than expectations. The pace for the metal and bond markets in the next session will be determined by the market's assessments of the economic situation in the U.S. and how it will affect the next Federal Reserve decisions. As for now, the stronger case is that more hikes will be seen in this tightening cycle, but as Jerome Powell stated, it will all depend on the incoming data. The technical analysis of the daily chart points to a neutral to a bearish outlook for XAG/USD, indicating the potential for further bearish movement. The relative strength index displays a flat slope below the 50 middle points, while the moving average convergence lays out weaker red bars. Furthermore, the pair is below the 20,100 and 200-day simple moving averages, highlighting the continued dominance of bears on the broader scale, requiring the buyers to take action. Traders should eye the 20 and 100-day averages as they are about to perform a bearish cross, which could exacerbate the downside in the near term. And with that, we've come to the end of the video. I'd like to thank you all for watching and also remind you that this is news and entertainment and should never be used as investment advice. Please talk to a professional before making any financial decisions. Thank you.